So, last week we looked at Tether. Today we're looking at the other one, USDC. Built by a company called Circle, headquartered in Boston, trades on the New York Stock Exchange, audited every single month by Deloitte. If Tether is the stablecoin that conquered the streets of Southeast Asia, USDC is the one that walked into the boardrooms of Wall Street. Both are pegged to $1. Both have over $50 billion in circulation, but they are not the same dollar. And by the end of this video, you'll understand exactly why your friends in Manila are using one and the funds in Singapore are using the other. This is SEA Daily Buzz, and this is the story of USDC. To understand USDC, you have to understand the company behind it. Circle. Not a crypto startup that got lucky, not a foreign entity registered in some island. A Boston-based fintech company founded back in October 2013, yes, 12 years ago, by two American entrepreneurs, Jeremy Allaire and Sean Neville. Jeremy Allaire is not new to building internet companies. Before Circle, he co-founded Brightcove, a video platform that went public on the NASDAQ. So when he started Circle in 2013, he didn't approach crypto the way most early Bitcoiners did. He approached it the way a traditional software CEO would approach it. He hired lawyers first. He talked to regulators first. And in 2015, Circle became the very first company in history to receive a BIT license from the state of New York. That one decision shaped everything that came after. Circle wasn't always a stablecoin company. In the early years, it was a consumer app, a way to send Bitcoin between friends, like Venmo for crypto. But by 2018, Allaire and his co-founder Sean Neville saw where the market was going. The world didn't want volatile Bitcoin for payments. The world wanted a dollar that lived on a blockchain. So in May 2018, Circle raised $110 million, and in September of that same year, they launched USDC. But here's the part most people don't know. Circle didn't launch USDC alone. They built it together with a company you've heard of many times on this channel, Coinbase, and a third partner, the mining giant Bitmain. The three of them formed something called the Center Consortium. The idea was simple. No single company should control a dollar-backed token. Multiple companies, multiple checks, multiple eyes on the reserves. That structure lasted 5 years. In August 2023, the Center Consortium was dissolved and Circle took full control of USDC. By that point, Sean Neville had already stepped back from day-to-day operations, and Jeremy Allaire was the sole CEO. Now let's talk about the most important part of any stablecoin, the reserves. Where is the money actually kept? For every USDC in circulation, Circle holds $1 of value in real assets. Roughly 80% of those reserves are short-term US Treasury bills managed by BlackRock, the largest asset manager in the world, through a dedicated fund called the Circle Reserve Fund. The remaining 20% is cash, sitting at BNY Mellon, which is one of the oldest and largest custodian banks in America. And every single month, the global accounting firm Deloitte produces an attestation report on these reserves. Every week, Circle publishes a public breakdown. You can go to their website right now and see, line by line, what they hold and where they hold it. This level of disclosure is not common in crypto. It's not even common outside of crypto. It is the most transparent stablecoin structure that currently exists at scale. And here's the number that surprises everyone. As of 2025, USDC's market capitalization is about $73 billion. Tether's is over $200 billion. So by size, Tether is roughly 3 times bigger. But by transaction volume, USDC actually moved more money in 2025, $18.3 trillion versus Tether's $13.3 trillion. According to Visa's tracking data, USDC overtook Tether in volume back in April 2024 and never gave the lead back. Smaller pool of money, moving faster. That tells you something about who's using it and what they're using it for. Hold that thought because we'll come back to it in Story 3. For 4.5 years, USDC was the boring, reliable stablecoin. No drama, no controversy, just $1 every day, every block. And then came March 2023. Friday, March 10th, 2023. A bank in California called Silicon Valley Bank, SVB for short, collapsed. It was the second largest bank failure in US history at that point. By noon, the FDIC had taken over. By afternoon, panic was spreading across the entire tech industry because SVB was the bank that almost every Silicon Valley startup used. What most people didn't know on Friday morning is that Circle, the company behind USDC, was one of those startups. That evening, around 10 p.m. Eastern Time, Circle made an official disclosure. $3.3 billion of their USDC reserves, about 8% of the total backing, was stuck inside Silicon Valley Bank. Trapped, possibly frozen, possibly lost, depending on what the US government decided to do over the weekend. Within minutes, USDC started to fall. By Saturday morning, it had broken below 90 cents. By Saturday night, it touched 87 cents. The entire crypto market panicked. Traders who had parked their savings in USDC, thinking it was the safest stablecoin, watched their balances drop by 13%. But here's what saved it. On Sunday evening, the US Treasury, the Federal Reserve, and the FDIC released a joint statement. All SVB depositors would be made whole, every dollar protected. By Monday morning, March 13th, Circle had confirmed access to the full $3.3 billion. By Tuesday, USDC was back at $1. Total Depeg duration, about 72 hours. Total damage to Circle's reputation, significant but survivable. What happened next is the part that matters. Circle didn't just go back to business, they restructured. They moved the cash portion of their reserves into BNY Mellon. They diversified across multiple banking partners. In February 2024, they made another major decision. They discontinued USDC issuance on the Tron blockchain entirely. The reason was simple. Tron was facing increasing regulatory scrutiny, and Circle wanted to stay on the right side of every regulator in every jurisdiction. Then came June 5th, 2025. Circle went public on the New York Stock Exchange. Ticker symbol CRCL. The IPO was priced at $31 per share. By the time trading opened, the price had jumped to $69, a 123% gain on day one. Circle's market value crossed $18 billion, and 1 month later, in July 2025, President Trump signed the Genius Act into law, the first federal stablecoin legislation in U.S. history. USDC was, by design, already compliant with almost every provision in that law. Circle had been preparing for this moment for 10 years. Now let's bring this home. Because here in Southeast Asia, the story of stablecoins is not USDC versus Tether, it's USDC and Tether, both at the same time, for very different jobs. Across our region, roughly 99% of all stablecoin activity flows through these two coins. But the split between them depends entirely on who you are, where you live, and what you're trying to do. Start with cost. Sending USDC on the Ethereum network can cost anywhere from $2 to $20 per transaction, depending on network traffic. Sending USDT on the Tron network costs about $1 to $3. Sending USDC on Solana or on an Ethereum Layer 2 network like Base or Arbitrum can cost less than 10 cents. This is the single biggest reason Tether dominates retail use across our region. For a worker sending $100 home to their family, a $3 fee is acceptable. A $15 fee is not. Now let's go country by country. Singapore, population 5.9 million. The financial capital of Southeast Asia. Here, USDC is the institutional standard. Circle received approval from the Monetary Authority of Singapore, MAS, to operate as a major payment institution back in 2024. Singapore-based funds, fintechs, and even some traditional banks use USDC because it fits inside their existing compliance frameworks. The MAS Project Guardian initiative, which tests tokenized finance, runs primarily on USDC infrastructure. Philippines, different story. On coins.ph, the largest local exchange, the USDT to peso trading pair handles roughly 75 to 80% of stablecoin volume. Why? Because USDT on Tron is cheap, fast, and already accepted by every overseas worker sending money home. But that picture is shifting. Back in October 2023, Circle partnered with coins.ph to promote financial inclusion through stablecoin remittances. And just this January, in 2026, Remitly, one of the largest remittance companies in the world, partnered with coins.ph to bring USDC-powered remittances directly to Philippine pesos. The transformation is happening, slowly, from the institutional side. Indonesia. The Singapore to Indonesia corridor moves about $45 billion per year in cross-border payments. Around 89% of the business-to-business volume on that corridor uses USDC because companies need the audit trail, the bank-grade compliance, and the regulatory clarity. But on the retail side, individual users hedging against rupiah volatility, Tether is still the default because of cost. Thailand, the most interesting case. The Bank of Thailand launched something called Tourist DigiPay, a regulatory sandbox that handles both USDC and USDT for inbound tourist payments. Meanwhile, Siam Commercial Bank, SSCB, one of Thailand's largest commercial banks, is piloting USDC-based cross-border transfers for corporate clients. And underneath all of this, in April and May of 2025, Circle quietly launched something called the Circle Payments Network, CPN. It's a new payment infrastructure that connects banks, fintechs, and remittance companies directly through USDC without the SWIFT system in the middle. It's still small, but it's growing. And if it works, it could change how money moves across our entire region within the next 5 years. So here's the takeaway. Both USDT and USDC are pegged to $1. Both are accepted across Southeast Asia. Both serve real people every day. But they were built for different people by different teams with different priorities. The mother in Manila receives USDT. The fund manager in Singapore receives USDC. Both are $1, but they are not the same dollar. That's why both exist. That's why both will keep existing. If videos like this help you understand how money is changing, please consider subscribing, hitting the like button, and turning on the notification bell. It makes a huge difference in helping us keep making this kind of content. Thank you for watching SEA Daily Buzz, and I'll see you in the next one.